any of the student, right? Anyone who is, let's say, a student is doing commerce, arts, maths, or science, right? So end of the day, they have to work in a company, right? They have to deal with businesses, right? So therefore, everybody should have some basic knowledge on business and accounting, including economics, right? So first, let's start with what is meant by accounting. As a student who is doing accounting, you need to know the complete, comprehensive definition, full definition of accounting, right? So this is what in our syllabus, right? The main chapter is need of accounting. Need of accounting is the main chapter. So on this chapter, first thing, we need to know what is meant by accounting, the definition. So actually there are two types of accounting: financial accounting and management accounting. Financial accounting and management accounting. So financial accounting is what you study in grade 11, grade 12. The complete syllabus is on financial accounting, right? In grade 13, we have some part of management accounting, right? So initially we will study what is meant by this financial accounting. Then the definition, we have to learn the definition, right? So under the definition, we will cover almost everything in this chapter. Who are the stakeholders? Stakeholders means who are the users of accounting, who use the accounting information. Then the accounting process, accounting environment, environmental factors, accounting elements, right? Objective, the history, important accounting terms, bookkeeping. So these are the subtopics in the first chapter. So I will be explaining one by one. Okay, so let's start. Okay, so I'm going to start with the definition of accounting definition. We are going to define. So the accounting definition says it's a function. Accounting is a function which provides financial information. Remember these terms. One by one, let's explain. Accounting is a function which provides financial information to various parties, different people. Accounting is a function which provides financial information to various parties to take economic decisions of a business, economic decisions of a business by collecting, recording, classifying, summarizing, and interpreting. Collecting, recording, classifying, summarizing, and interpreting financial transactions occurred in accounting entity. Right. So I will explain one by one each term. These are accounting terms, basic accounting terms. Right. So before I start, what I want you have to do is just read this definition few times, at least 5 times. Read this definition, right? So இதுதான் accounting the complete full definition, right? இந்த definitionல நிறைய விஷயம் இருக்கு, right? So நான் அடுத்த ஸ்டெப்புக்கு போகும்போது ஒரு 4-5 டிப் இந்த டெஃபினிஷனை நீங்க ரீட் பண்ணுங்க. ரீட் பண்ணி ஃபுல் அண்டர்ஸ்டாண்டிங் ஒன்று எடுங்க. ஒவ்வொரு டேர்மை பற்றி நான் ஒவ்வொன்று எக்ஸ்பிளைன் பண்றேன். I'll give 1 minute for you all to go through this. Right. So let's define, or let's check one by one. So initially it says accounting is a function. Accounting is a function. So we need to know what is mean by a function. A function on data enna, right? A function means it is, there is an input, a process, and an output in a function. A function on or input on it, அதோட ஒரு process, then there will be a final output. For an example, let's say we are manufacturing tables, right? We are manufacturing tables. So when we are manufacturing tables, there is an input, wood. ஒரு டேபிள் ஒன்று நான் செய்கிறேன்னா அதுக்கு ஒரு இன்புட் ஒன்று தேவை. அந்த இன்புட் தான் the wood. Then there is a process, cutting, polishing, right? Is a process. Then you will have the final output as the table. So similarly, accounting also has input. In accounting, you have input, and there is a process and output, right? So there can be a question: what is the input of accounting? The accounting la input enna, right? So input of accounting is transactions and events. So we need to know what is meant by a transaction, what is meant by an event, right? So transactions and events, that is the input. So there are some past paper questions on MCQ. They ask what is the input of accounting, and you will get different answers. So you need to see, you need to tell the input of accounting is transactions and events. Then there is a process. What is the process? Collecting, recording, classifying, summarizing, and interpreting. This is the accounting process. Collecting, recording, classifying, summarizing, interpreting. This is a separate chapter I will explain. And finally, this is number 1, this is number 2, and this is number 3. Output of accounting. Output of accounting is financial statement. So what is the input of accounting? Transactions and event. What is the output of accounting? Financial statements. So remember these things. So accounting is a function, right? So that is what we are doing. Accounting is a function. Okay. Let me show from the mind map, so then it will be easy, right? Function means there is an input, process, and output. There is an input, process, and output. In the second term, which provides financial information, which provides financial information. So we need to know what is meant by this financial information. So before that, let's see what is information. Information. What is information? Information means those are processed data. If you have studied in IT, they say processed data. So this information we can use for decision making. Informations are used for decision making. Decisions, right? So all the informations available can be divided into two types. One is called qualitative information. Other one is called quantitative information. Qualitative and quantitative. And remember, we don't take qualitative information in accounting. We don't take qualitative information. So what is meant by this qualitative information? Qualitative means where the information cannot be presented in numbers, right? You can't present in numbers. For an example, the manager is a skillful person. It is an information. In a company like the manager is very skillful. Whatever the task we give him, he will do it. It is an information. The cashier is a very trustworthy person. The cashier very trustworthy, right? So can you value it? Can you give a number, a percentage or a number? You can't give. There is no value for that. So you can't present in numbers. Therefore, we don't take qualitative information in accounting. Right? Then there is another type of information. We call it quantitative information. You can quantify quantity, right? You can present in numbers, right? And we don't take all the quantitative informations. This is also divided into two: non-financial information, non-financial and financial. Even though you can present in numbers, there are some informations you cannot present in rupee values. So they are called non-financial information which cannot be presented in monetary terms. What is meant by monetary terms? Monetary terms means rupee value, rupees and cents. If you cannot present in rupees and cents, we don't take those information. Non-financial informations are not taken into accounts. We will take only financial information. So what is financial information? The information which can be presented in monetary terms, that is rupees and cents. Examples: the annual profit is 120,000, the total asset is 50,000. So this can be presented in rupees and cents. So The accounting is a function where you have an input, process, and output, which provides only financial information. So we know what is meant by information, what are the qualitative information, what are the quantitative information, non-financial and financial. So we provide only financial information. Accounting is a function which provides financial information. Right? And to whom do we provide the information? To various parties, various people. The information we provide is used by different parties. Many people use this, right? We call them in accounting, there is a term stakeholders. Stakeholders. Right? In accounting, we call them stakeholders. Stakeholders, the meaning is users who use the accounting information. Right. So let's see who are these stakeholders. So here we have stakeholders, users of accounting, user. So all the users of accounting who use this financial statement, who use these profits, losses, right? We can divide them internal users and external users. Internal means within the business organization, right? நாங்க ஒரு business ஒன்று எடுத்தா அந்த businessல உள்ளுக்கு work பண்றோம், right? Internal. So we divide them, the owners, internal. The owner, the management, who manage the business, the managers, right? The directors, they are internal. And employees, people who work in the organization. So they are internal stakeholders. Then we have external stakeholders outside the business, government institutions, like customers, suppliers, creditors, or banks, any loan providers, and media. So they are external. There can be more competitors, like pressure groups. Okay. So there are many external parties who use our information. Okay. Someone tell me a business that you know in your area. யாராவது சொல்லுங்க பாப்போம், உங்களோட ஏரியால உங்களோட தெரிஞ்ச நானமார்கள் தாத்தமார்கள் அது யாரு சரி செய்யற ஒரு பிசினஸ் உண்டு, ஏதாவது ஒரு பிசினஸ் ஒரு ப்ராக்டிக்கல் எக்ஸாம்பிள் ஒன்று எடுத்து எனக்கு எக்ஸ்பிளைன் பண்ணுங்க. Who is ready to tell? Any business that your father, mother, or someone who does? Rifki, can you tell me? Azra? Some business, any business that you all know, your known person who does. Please, fast. Rimas, Shara. Yeah.
Is it a new trend,
Didn't get you.
sir?
Yeah, tell me.
Yeah, should I want to explain regarding this?
No, no, no. I just need a business. Just
Yeah, I'll tell is it a new trend?
didn't get you. What is the business?
Is it a new trend? It's
Yeah.
fancy shop.
Okay. Fancy shop. Right. So thank you. Okay, so we have a fancy shop, right? A fancy shop, right? So Zahara has a friend who has started a fancy shop, right? So who are the internal stakeholders within this fancy shop? So there is a owner who invest and who start this business. Okay, the owner and the management. There can be a manager who works in this fancy shop and the employees. So they are within the business, internal stakeholders. And also there are external. Example, the Inland Revenue Department. Inland Revenue. So what they do, they charge tax, right? So this fancy shop, the income for the month is 1 million. 1 million income. So for the income, they need to pay tax. So this Inland Revenue Tax Department, they look at the business and they take the information provided by this fancy shop. Right? Basically, this happens for companies, and for an example, I'm telling this. Right? The customers who used to buy fancy items from this shop, they also need this information. Customers, suppliers who supply the goods, right? Who supply, let's say it can be any supplier, local or foreign. So they also need this information. And the media, competitors. There is another fancy shop in another place. So they also see what is happening, what is going on. And so they make their decisions on these financial statements. So understand stakeholders, internal and external, right? Okay. So go back to the definition. We'll start again. Accounting is a function which provides financial information to different stakeholders, internal, external stakeholders, to take economic decisions. It is not just decisions. It is not just decisions. It is called economic decisions. So what is mean by economic decisions? So let's try to understand economic decisions. So this is actually related to economics. Right? You have a major subject called economics. So what is mean by economics? Economics start with a concept called scarcity. Economics starts with a concept called scarcity. So what is this scarcity? Scarcity means people have unlimited wants and they have limited resources. Unlimited wants, limited resources. So let's say this is, who is this? This is Rifki. Okay, Rifki, you're there. Rifki, he's silent. So Rifki is having 100,000 rupees. So I'm going to give 100,000 rupees if he speak. Okay. So by getting this 100,000, he can do so many things, right? 100,000 is a limited amount of money. Limited. Limited. And what you can do? What he can do? Can someone tell me? If you have 100,000 rupees, what are the things that you can do from this 100,000 rupees? Assume that anyone who tell I will give this 100,000. Assumption, assume. Right. What can you do? Tell me. Speak up. உங்களுக்கு ஒரு 100,000 rupees இருந்தா என்ன செய்யணும்? Don't worry about the language. You can speak in any language, right? Tell me. தமிழால சொன்னாலும் பரவாயில்லை. Right. Azura, can you tell me?
Start a business.
Okay. Start a business. What else? One option, you can start a business. Someone else tell me another option. Ashra. What can he do? One option, he can start a business. Yeah. Who else can tell?
Fulfill our own wants.
What are the ones? What are the wants? Wants means you can consume. What can you do? What are your wants?
Food.
You go and eat. What else? You can travel, right? If I get money, I will travel. What else? I can purchase a mobile phone, right? These are called consumption, right? From the 100,000 he has, either he can consume, or he can invest. So all these are fulfilling personal wants, are consumption options. He can consume, and investing in a business, or investing in a fixed deposit or a savings account, or Colombo Stock Exchange, stock market, buying stock market, right? So these are called investment option. So from this 100,000, either he can consume or he can invest. If he consume, that is over. Nothing will remain. right? But if you invest, you will get return for this investment, right? So let's come back. You have limited resources and all these wants. He want to go somewhere, he want to buy foods, he want to buy a mobile phone, he want to invest, right? These are unlimited. Food, clothing, shelter, security, like jewelry, medicine, transportation, etc. There are many wants. So these are unlimited, unlimited wants. But there is a limited resource. So from 100,000, he can't do everything. Therefore, he need to select the best. So let's say he is selecting, now this time I want to buy a mobile phone. So he is buying this, selecting the best option available. Select the best. Select the best. So if he select the best option, or if he choose the best option, he need to sacrifice all other options. He can't buy food, he can't travel, he can't start the business, he can't invest in fixed deposit or stocks. So he sacrifice. That is why we call sacrifice. He sacrifice everything and select the best option available. And once he sacrifice, all these are called opportunity cost. Opportunity. Opportunity cost. Right? So let me explain again. When Rifki is having 100,000 rupees, it is limited. So we call it limited resource. But he has unlimited wants. He has to do a lot of things. He has different options to do. But he can't do everything. Then what he does is he will select the best option that is suitable for him. And he sacrifices everything else. This is the concept of economic decision, selecting the best option available. That is called economic decision. Economic decision. Limited resources, unlimited want, selecting best option, sacrificing the rest, having opportunity cost. Right? So I hope it's clear. Opportunity cost, economic decision. So all these parties, all these stakeholders, right? All the stakeholders make decision. Make decision. It is not a normal decision. It is called economic decision, but gives the highest benefit. What gives the highest benefit, right? Let's say this fancy shop, right? The owner of this fancy shop, right? So he will see the financial information, the profit. How much is the profit of this fancy shop? If the fancy shop doesn't give the profit, so let's say there is a loss of 5 million from this shop, 5 million loss, right? 5 million loss, right? Continuously making losses. Then he will think, he will decide based on his economic decision making. What is economic decision? Best option available, selecting the best option, right? So he will stop pumping money to the business, or he will stop investing more to the business. He can start something else. That is his economic decision. If the business is performing well, right, having very good profit, then what he does, he will invest more to the business. And he will invest more and he will run the business. And let's say employee. There is an employee in the fancy shop. Employee, right? The employee make his economic decision. He also has a limited resource. He has limited time, right? He has limited qualifications or limited skills, right? So based on that, and also he has unlimited wants. And there are different options. He doesn't need to stay in this fancy shop. He can work in any other organization, right? He can work in a bookshop. He can work in a call center, right? So he has so many options. So he will see what is the financial stability or what is the profit of this business, whether he is getting a good salary. His financial benefits are the salary, the bonus. So he will check all these things. Financial information. These are financial information, right? Then he will make his economic decision whether to stay in this business or to leave the business. So all these stakeholders will make their economic decision, which gives the best options available, right? Because everyone has an opportunity cost. Everyone has an opportunity cost. The supplier, the creditor, supplier will think, okay, I am giving goods on credit. Supplier give goods on credit. Or loans. Bank will give loans to the business. So if the business is making losses, continuous losses, the supplier will not supply goods because he can't collect his money. Bank will never give a loan because they can't recover the loan from the business. So that's their economic decision. So all the stakeholders make their economic decision based on the financial information provided by the business. Okay. So we are back to the definition. Accounting is a function which provides financial information to different stakeholders to take economic decisions. So I explain what is economic decisions of a business, not anything else. Economic decisions of a business, not the personal things, right? So we need to know what is a business. Business means any service or anything which is an economic activity. Any economic activity which is related with continuous regular production and distribution of goods and services for satisfying human wants. So let's see what is a business. Right. So this is the definition for the business. It is an economic activity. So we learn what is economic. Economic decision. So same thing, economic activity. Limited resource, unlimited wants, which is related with continuous and regular production and distribution of goods and services for satisfying needs and wants. Fancy shop, they satisfy needs and wants and they earn profits. Right? So there are objectives, there are characteristics, different types of businesses, sole proprietorship, partnerships, companies, clubs, charities, government organizations, right? And the business process. Okay, so I'm not going to explain individually here. We will explain the business separately, right? So decisions are made for a business by how? Collecting, recording, classifying, summarizing, and interpreting. This is called the accounting process. Very important because everything after that is accounting process. So what is accounting process? Accounting process starts with transactions and event. So what is this? Earlier I told what is transaction and event. That is the input of accounting. Input. And this is the process. And financial statement is the output. The input, process, and output. So what is meant by transactions and events? So let's try to understand the transactions. Okay. Accounting input, one of the main input, transactions. So what is a transaction? Transaction. Let's say you are going to the shop and you are purchasing a book. That's a transaction. You are traveling in the bus and you are paying the bus fare. Right? So that's a transaction. You're going in the tuk, you're paying the charges. That's a transaction. The person is working and he's getting a salary. That is a transaction. Right? So you need to understand the features of a transaction. Then it's clear. Features. There should be two parties involved in a transaction. There should be two people. When you purchase the book from the bookshop, there are two parties, the seller and the buyer. There should be something measurable in monetary terms. So already we know what is monetary, rupees and cents. There should be a rupee value in that. So when you purchase the book, you paid 50 rupees, 100 rupees. Is a monetary term. And there should be transfer of resources. Transfer of resource. What is resource? Resource is something available with you. You paid cash and you bought the books. So it's a transfer. If an employee works in the company, if an employee is working in a company, there is a transfer. He provides his human skills. He provides his service and he's getting salary for that. So to become a transaction, there should be three features involved. Two parties, monetary terms, and transfer of resources. Then we call it's a transaction. A transaction takes place when an exchange that is measurable in monetary terms is made between two parties. Same thing only given here. Exchange measurable in monetary terms between two parties. Obtaining a bank loan. There is a bank, there is a person who is getting the loan. And there is monetary term and an exchange. payment of wages, right? So this will affect asset, liabilities, and equity. Later I will explain all these terms. So not only transactions, there is another input which is called events, So what is mean by event? Event means even though there is no exchange does not take place. There is no exchange, but there is a change in the assets, liabilities, and equity. There is a change. For example, stock of goods getting destroyed by a fire. We have our stores. In that, we have the raw material. In the stores, we have raw material. Due to a fire, all the raw material got destroyed. Now here, there is no exchange, but it is an incident which affects our stock, which affect our stock. Stock is our asset, right? So it affected our assets. So these type of events also recorded, right? Depreciation, the usage. Depreciation is usage of a non-current asset, machinery, motor vehicle. The usage, when you use the asset, the value decreases. That is called depreciation. Right? So that not only transactions, we have to record the events as well. Right? So in the accounting process, the input is transactions and events. Now let's see the process. What do you do? First step, you collect all the documents. Collecting. What do you collect? Documents. What are these documents? These are proof for a transaction. These are proof for a transaction. Let's say you are purchasing, you are taking 1,000 rupee from your parent or from your friend, right? And you are telling that I'm going to buy some books. So the total cost of the book is 200 rupees. And you go and tell your father, I purchase books for 800 rupees and here the balance 200. Right? Then you take that 600 into your pocket. Now father is having a doubt. Right? I gave 1,000. He said 800 is the cost of the books. Then he has a doubt. How can he check whether the cost of the books is 800 or any other amount? How to check? Can someone tell me?
Bills.
Yeah, he will ask, okay, it is 800, show me the bill. Then there is question mark. No, he can't lie. He can't lie, he need to give the proof. These proofs are called source documents. So in accounting, in a business, without a proof, you don't record or you take any transaction. And so the first step in accounting, first step in the process is collecting all these bills, vouchers, receipts, statements, right? So we collect. So by collecting, you identify the transactions. So the first step in accounting is collecting source documents, collecting source documents. Then the second step, we record in set of books. We call them prime. Prime means initial set of books. Initial. Prime set of books. Prime entry books. Right? So mainly we learn 7 prime entry books. Cash book, petty cash book, purchases, sales, return inward, return outward, and the general journal I will explain later. Right? So there are 7 prime entry books. Sales, you record the sales separately in a sales book. Purchases, what you purchase, you will record in the purchase book. All the cash, receipt and payments, we record in the cash book. So likewise, we record them in the prime entry books. So collecting, recording. Then you classify in the ledger accounts. Ledger account is something like a T. You classify what are the assets, what are the liabilities, what are the income, expenses, and capital. So there are 5 types of ledger accounts. You classify through these ledger accounts. So when you are classifying, we use a system called double entry system. Double entry. Right? So collecting, recording, classifying, and you summarize by preparing a trial balance. Something like this, which has debit and credit, and you summarize. Collecting, recording, classifying, summarizing, and finally you provide the output of accounting, which is financial statements. So it is the interpretation. It shows what is the profit of the business. How much is the profit? What is the financial position? What is the position of the business? Do they have assets? Do they have liabilities? So this is the accounting process. Collecting, recording, classifying, summarizing, and interpreting. Interpreting financial transactions for business by collecting, recording, classifying, summarizing, interpreting. The financial transactions. Transactions which has a financial value. So already we studied what is meant by a transaction. Occurred in accounting entity. So we need to know what is meant by this entity. Accounting entity. Accounting entity means it is something considered separate to its owners. Separate to the owners. For example, now fancy shop. Now let's say Mr. A is starting a fancy shop by investing 100,000. So in accounting, even though fancy shop is run by the same person, in accounting point of view, he is treated separate. So fancy shop is different, owner is different. If owner gives money to the fancy shop has to repay that money. Then this becomes an accounting entity. So the accounting entity could be a business, a division, a department, a cost center, group of businesses, government, or non-profit entity. It can be a sole proprietorship, partnership, or a company as well, right? So that's the definition of accounting. Right? So I hope you all understood the definition, right? So I want someone to tell me the full definition. I'll give 1 minute, go through fully and tell me the definition, the full definition. Now, when you think about the definition, when you think about the function, automatically the function should come to your mind. What is meant by the function? The picture, input, process, output. The picture should come to your mind. Information, economic decisions, stakeholders, right? Transactions, events, the process. Those things should come to your mind. That is why we call uh, it's a mind map. Take 1 minute and voluntarily, please, everyone try to give me the answers. Otherwise, no point. Okay, I want everyone to participate. If you all give your side input only, I can give my side as well. Right? Okay, so if anybody is ready, they can answer. So, but if it's wrong, nothing to worry. We are not losing anything. We are learning. We are all learning. So I might make mistake. You might make mistake. So nobody is going to say anything. We will learn and we will show in the exam. Right? So any volunteers that who's willing to tell me the definition? Right. Tell me. Rimas, can you tell? Rimas. Anyone else? Azra, Asma, Shara.
So
Yes, yes.
the function which provides financial information to various parties to make economic decision of a business by recording, summarizing the financial transaction according to accounting entity.
Super. Very good. Well done. Anyone else? Very good, Rivas.
Sir,
That's that.
accounting is the function which provides financial information to stakeholders to enable them to make decisions of a business by collecting, recording, summarizing the business transaction occurred the entity.
Very good. Very good. Well done, Azhar. Super. Right. Who else?
Accounting is the function which provides financial information to various parties to take economic decisions of a business by collecting, recording, classifying, summarizing, and interpreting the financial transactions occurred in an accounting entity.
Super. Well done. Well done. Yeah. Right. I can give opportunity to another one more person. Who is that? Is the last person to tell? Yeah.
So
Yes. Let's give.
the function which provides financial information to various parties to make economic decision of a business by recording, summarizing, collecting,
Right.
occurring in a accounting entity.
Super. Okay. Well done. Well done. Right. So really happy. What we'll do is I will now share some MCQ questions. So based on the knowledge that you learn, you need to answer that MCQ, right? So only from this part, only through this mind map, you all can give the answer for that. Right? So we'll wind up the session for today. Do it as a additional work. So within another 5-10 minutes, I will share the MCQ that you all can do it. Right. So I hope the definition is clear. Before we start anything, right? Before we start anything, we need to know the basics. What is accounting? Now everyone know what is accounting. If someone asks, tell me what is accounting. You are an accounting student, so you need to tell me what is accounting. So you give a full picture, right? Nobody can have any doubts. Even in the definition, if someone asks what is a function, what is a economic decision, you have the knowledge to explain, right? So that is how you learn. So I've already shared the presentation in the WhatsApp group as well. And if you are finding difficulties in getting into the Google Classroom, just drop me a WhatsApp message. I will try to solve it somehow. Today itself, you clear it, right? So the next session, uh, we can do economics or the business studies. I will get in the group. Okay. So is it clear? Right. So we'll wind up the session. I will share the MCQ. Okay. So have a nice day. Let's see you soon. Thank you.